Good evening, everybody. Just doing a little bit of a market update here. Been a fun one since last Friday. Nice nukes. We'll go through the whole Bitcoin crash that we're experiencing right now. And first off, looking at some of the data points that are coming out. So consumer confidence, obviously not hitting the forecast. Tomorrow we've got new home sales. That's going to be the one I'm going to be interested in the most. But Thursday and Friday pre-market, this is an hour before the New York Stock Exchange opens, my time. We're going to see a lot of data coming out, and these are going to be the interesting drivers going into the weekend. So with that being said, we'll look straight into Bitcoin. If I can get this sucker to load here. There we go. Still at critical mass. I mean, we were seeing this stuff over the last couple of days, and like even here getting back above 65%. Now it's 75%. This is absolutely wild. We're getting to the point where we want to see some type of potential turnaround. If we look lower time frame as well, it's not a significant change yet. Everyone is still 75% long. This might be misleading a little bit, especially since we have already massively destroyed the long orders in the liquidity book, with the last major pocket left down around 83, 84K. Below that, there's actually a little bit of a dead zone. So, well, we'll go through it. Looking on the aggregate order book data charts here, we're trying to find some type of bottoming structure. There's some decent amount of spot buys, like people are DCAing in spot, buying down as it breaks towards 90K. I saw a very large spot buy down here at 86. Again, if your long-term outlook is DCA, discount and hodl, this is under 90K. Who knows when you're going to get this next? But in any case, moving forward, on the liquidation side, we do have some structure forming below us as far as the liquidity side. We'd have quite a bit of stuff forming below us to try and hold those levels, hold the structure. Nothing as of yet has been able to hold. We've seen little bounces when we have lots of overlapping long orders, but it's been met the last two times with pretty significant sell-offs. So if we can hold this higher low and this acts as a buffer, we could try to potentially form some kind of bottoming structure here. It is starting to flag out. It is not starting, it is slowing down a little bit, the dump, but it's no evidence, at least not yet, that we're, doing some type of major reversal. For that to happen, we need to get back above some of the structure we've broken down. 90K is specifically getting back above that hump before we go up and charge and probably instantly reject 92, where I would expect if we have a gain back up, we go to 92. Below that, this is where it gets interesting. Plunge protection stepped in pretty aggressively below us in the mid 70s. So I'll leave my cursor off that chart just so we can all see that. But those are hundreds and thousands of Bitcoin layered orders from 78K to 72. So this is definitely plunge protection. This is keeping us afloat. And we've got some pretty decent amount of stuff layered in currently here. So we'll see if this holds and we get a local higher low to potentially regain some stuff to retest higher. But if we're going to find a bounce move, it should be here locally. That's just the long and short of it. Moving on from there, looking at the liquidations themselves. So in the last 24 hours, we have been, or 48 hours, been breaking down very hard into these levels. I'm way more concerned in what we're doing on like the 1 month. That's, to me, at least the most important stuff that we're seeing as far as those liquidations. Now, we do have some stuff building still below us. We got some nice pockets down here around 84, where we're pretty much at now, where it's a little bit of a dead zone. It's if we start to clear 80K, it gets really nasty on a very high time frame. And if that's the case, I would argue we're going to 76, 75 to clear an old CME gap. So we're not out of the woods yet. We're still in the middle of this dump. Nothing has felt relatively changed. And if we look at the higher time frame, just to understand where the liquidations are based off of time, yes, there is still quite a bit here below us. If we do start getting down into these lows, 83 is pretty much as much as a dead zone as you're going to get. We do not want to get below 80K. If this gets filled, this needs to be met with the biggest face melting buyback imaginable. And that's the direction it's pulling us to at the moment. This liquidation sub 80K is still pulling us in that direction. And then finally, on the funding rates, even though we're in a big downside move, the open interest weighted funding rate is massively bearish. Now, a lot of this is being pushed directly by the fact that Bybit obviously got hacked, so they're stuck at 0.01 on most of their tokens and coins. OKX also really pushing the price down as well. Just keep that in mind. The volume weighted funding is not that bad in all honesty, but with the amount of downside we've had and the fact that the exchanges are not throwing in massively negative funding rates to try to support longs is just telling us that they're not ready for that to happen yet. So just keep that in mind. So with that being said, looking over at the charts, first off, just want to say, right, we have broken down behind some major levels here. The big loss that I talked about on, I don't know if I talked about it on Friday, but we started losing this stuff going into the weekend. The loss, the area that I was interested in for a bounce was potentially this low down at 94, which was the lowest local possible point for a potential loss. The fact that we lost it, flipped it, and then nuked through the yearly open. Yeah, the moment we flipped the yearly, the upside was done. There was nothing to hold. There was nothing to regain. It was just terrible. So we do have downside priority, and there's a couple key areas in this structure. So currently, we are rejecting underneath an old 4-hour level. Like, to put this in perspective, this is the last untested area, which we're testing now. There is no more 4-hour daily, weekly structure below us until we start talking about down at 81K, which is somewhere we really don't want to revisit. On the local stuff, right, we're still rejecting it going lower. There's an interesting spot here at 89.2. This would be the first area. If we get back above, I'd be interested to see us retest the lows at the daily open. This coincides with, if you go back in this video to look at liquidations and the liquidity is there. There's a big short blocking orders. And when you have these types of moves in a dump, right, pretty much a straight down dump, except for this, what's happening there? It's the first bounce in the move. This area, effectively this block, becomes the first area of resistance as we come back to retest things. It's almost always the case. So keep that in mind. Going a bit lower in time frame, yeah, we're still flipping levels bearishly to lose them. We want to see some localized regains. Nothing as of yet is attractive. Like I said, getting above 89.2 is the first real spot to look higher. Until we start flipping some levels to go back up to retest stuff, you're potentially looking for a continuation lower. So keep that in mind. Like I said, if we're going to bounce somewhere, it should happen here. We're starting to slow a little bit, but it's straight lining, which is not parabolic on the dump, which is fine. Yeah, we just want to find some type of local bottom where we can potentially build some structure out on. And even if we start building some local structure, because we've had the big dump, we've lost levels, created new higher time frame lows, we need significant regains of level by end of day. Right now, this daily candle is just basically saying, yep, teleport me lower, take me all the way back down to 80K and potentially lower. End of day, we want to see some buyback, getting back below some swings, back below some lows from the mid-November time period. And realistically, none of this stuff is bullish on the higher time frame until that is regained. 96.5, that is the key on a higher time frame to regaining some major structure. High time frame daily and weekly, we need to get back over 93.5 to sustain some local price. So for that to happen, like I said, lots of stuff needs to change. We're going through the tariff period, big massive correction. We're about 20% down or more off the all-time high. Just remember, if you're sitting underwater and you're feeling that panic, like you have to get out of everything, again, this is something that's designed to make you feel that way. Watch for a potential bounce. If you come back up to potentially wreck stuff, that's fine. We want to see some type of V-bottoming structure. Otherwise, this whole upside looks like a pretty damn good distribution. And we're going to see the first kind of bounce, push off a cliff as we come back down to retest untested areas. So it's a little bit rough. I know it's a painful one, but at the same time, play the levels. If you're not in the short, if you didn't catch any of this on the way down, just remember, you're in priority down, so you're still looking for shorts until you get localized regains. The key here is really simple. Play your time frame that you're good on. Don't overextend yourself trying to scalp this stuff. Short-term traders are getting absolutely wrecked in this zone. So they're just basically wicking as we go lower. They're wicking out the 50 and 100x leverage traders. So keep that in mind. If we get some bounces, watch for some bottoming structure, play the levels, and I'll catch you tomorrow. Peace.